You sit in a room designed to make panic look expensive. Dark wood, quiet carpet, a table so polished it reflects the ceiling lights back at you like nothing in the world is allowed to be messy here. Across from you, faces are trying very hard to stay adult. On the wall, a screen bleeds red. Not dramatic red, worse, systemic red. The kind that turns confidence into a rumor. Somebody is still talking. You are not listening to the words anymore. You are listening to the tone underneath them. That thin vibration in the room when everyone realizes the model they trusted was built for normal weather and the weather is gone. You fold your hands, slowly. Because the second you look alarmed, the room stops being a room and becomes a signal. And when you are Warren Buffett, your face is not just a face. It is a market event. Outside, people are doing what people always do when money gets scared. Refreshing screens, calling brokers, selling good businesses alongside bad ones. Every talking head suddenly discovers the word discipline 5 minutes after losing theirs. The public story is simple because the public likes simple stories. You are the calm one, the old man with the cash. In every panic, they drag out the same quote: be fearful when others are greedy. Be greedy when others are fearful. Saying it is easy. Being the person who has to act on it while the floor gives way is something else entirely. What they do not see is that panic at this scale is not just emotion. It is mechanics. Forced selling disguised as opinion. Leverage turning hesitation into blood loss. Funds liquidating not because they are stupid, but because they borrowed against a world that no longer exists. You have watched this pattern since 1969, since 1987, since 2008. The actors change, the script does not. The real danger in a crash is not that prices fall. The real danger is that trust falls faster. Panic always pretends it is rational. It flatters people, makes them feel prudent, like they are finally seeing clearly. But most panic is not clarity. It is pain looking for a philosophy. The room waits for you to speak. That is the curse of being right too many times. People assume certainty where there is only discipline. They think you are calm because you know exactly what happens next. You are calm because you know nobody does. That includes you. You are not sitting here with a secret map of the future. You are sitting here with probabilities, scars, and a balance sheet that took 50 years to build. The calls have already started. They do not say save us. Nobody like that ever says save us. They say strategic investment, temporary dislocation. They dress desperation in tailored language and hope dignity changes the math. You hear all of it. You also hear the thing beneath it: need. Everyone thinks your power in a panic comes from money. The float sitting at Berkshire, over $100 billion in cash, built patiently, never deployed just to feel busy. But real power in a crisis is not money. It is the ability to say no while the world teaches itself to beg. Every call forces the same question: are you here to save businesses or to price fear? No quote on a coffee mug prepares you for that. Move too early and you lock yourself into someone else's rot. Move too late and extraordinary assets get destroyed by temporary hysteria. This is the private tension nobody writes about in the mythology. It is not courage versus cowardice. It is judgment under conditions specifically designed to break judgment. So you start sorting, not sectors, not narratives, people. Who tells the truth under pressure, who understands their own business without slides, who built resilience, and who rented appearance. You think about the managers you have trusted for decades, found not in crisis, but in the boring years, when character had no immediate audience. Because collapse rarely begins with the first bad quarter. It begins with the refusal to look stupid early. The loss is survivable. The need to maintain the illusion is what kills you. Executives delay, smooth, reframe. They buy time with language until time becomes the one thing they cannot afford. You have spent your life building the opposite kind of machine. Simple businesses, real cash, managers who do not need theater to impress you. The newspapers called it boring in 1997, when tech stocks were doubling every quarter. Prudence is humiliating at a party. Nobody throws parades for the person who kept dry powder while everyone else looks smarter on paper. Until the paper catches fire. You read until businesses stop sounding like stories and start sounding like systems. Can this company fund itself if credit stays ugly for 2 years, not 2 quarters? Can management accept dilution before bankruptcy? Teaches the lesson for them. You remember buying Burlington Northern in 2009? People called it a bet on a dying industry. What they missed was the math. Irreplaceable infrastructure, pricing power that does not care what the Fed does this quarter. You were not buying a railroad. You were buying time. That is what you are buying now. Flexibility, the right to outlast people who confused speed with strength. The world thinks panic rewards bravery. You know it rewards structure. There is no purity here, though. The terms will be brutal. They have to be. Preferred shares, warrants, protective covenants. You will be praised for restoring confidence and criticized for profiting from fear, sometimes by the same person in the same interview. You remember the Goldman deal in 2008, 10% dividend on preferred shares, warrants on $5 billion in common stock. The press called it a lifeline. Behind closed doors, some called it something sharper. Both views contained some truth. In real crises, clean hands are a luxury item. If you misprice risk to feel generous, you are not helping the system. You are spreading the damage. Sentimentality is not mercy when systems are failing. So you keep your face still. You ask one more question, then another. On television, somebody is saying this is a once-in-a-generation collapse. They say that every generation now. But you know better. The world does not end in crashes. It clarifies who depended on cheap confidence, who built for weather instead of applause. You think back to 1974, Berkshire down nearly 50%, the press writing obituaries for value investing. You were buying Washington Post shares with both hands. What the narrative missed was the asset, brand, distribution, a moat so deep the discount was almost embarrassing. Markets cannot stay irrational forever. The decision comes the way big decisions often do, not with drama, with quiet, a structure, a term sheet, a price only possible because terror has done half the negotiating for you. Enough downside protection to survive being wrong. Enough upside to justify being early. You nod once. The room exhales, and that exhale quietly annoys you. Because they think the hard part was choosing. It was not. The hard part was remaining the kind of person who could choose it all. 50 years of looking boring. 50 years of holding cash, while cocktail parties celebrated people levering up. 50 years of reading annual reports at 6 in the morning, not because it was exciting, but because it was the only honest work available. The market keeps falling, then stops, then falls again, then, eventually. It does what markets always do after enough forced humiliation. It remembers. And when it does, everyone will speak as if the opportunity had been obvious. They will flatten the fear into wisdom after the fact. But you will know what this really was. Not brilliance, not prophecy. Just the cold advantage of remaining the kind of person who understood, long before this room filled with red light, that panic is not the opposite of greed. It is what greed looks like when it realizes the bill is due.